Joining me now from Bubba Trading, Todd Horwitz. Barton is still with us. All right, you tweet as much as I do during commercial breaks, Todd. Let's talk about your thoughts. Let's talk about your thoughts on the action so far.
Well, I think the action was probably pretty much expected, Charles. I mean, basically, if you forget about everything else, the markets have been in wide sweeping consolidation for about 10 weeks here. We go to the bottom end, and it looks like we're going down, and then all of a sudden, boom, we get a big rally. Yesterday's failure to break above 2820 in the S&P signaled that there may be some trouble. We can blame it on the trade wars. We can blame it on anything we want. The end of the day is the markets failed to break out. Sellers came in, and this is the hardest time. It's the biggest time of confusion for traders and investors when markets are consolidating. And that's really what we have here. I don't think it has to do anything to trade wars, because if we look at grain prices, grains are higher. They're not going to be up limits. There's an oversupply of soybeans to begin with, and they're much higher than they were before this ever started. So again, I deal with farmers every day. That's part of what I do, and I think that there's not as big a deal as we're trying to make. I think it's really just the market showing you the price action, and that's really where we stand. That
is a great point. Let's talk about it because you're a technician. I'm going to use the Dow. I said last week, until we get through 26,000 on the Dow, anything can happen. And already, we're making a series of lower highs. Yeah. And so that would mean that consequently we could retest the bottom again. I mean, is that a sound theory right now?
I think it's a very sound theory. I would be very surprised if we go back and test October's low from my work, Charles. But to Todd's point, that number that he had on the S&P, that 2,800, 2,820 number, your 2,600 number on the Dow, that's a really key spot where we've already turned around twice. We were just a little bit lower than that. So the market is showing a teeny bit more weakness than I would like. But again, I'm not seeing us to go back and testing those lows.
All right, Todd, other issues, though, right? I mean, the financials, something is wrong with the financials. The yield curve. Listen, I know there's a lot of hype, and I know that this yield curve is great. It can predict a recession 2 years out. That's like me telling you there's going to be a massive snowstorm in the Northeast over the next 2 winters. Be that as it may, though, Wall Street reacts to this stuff, doesn't it?
They do react a lot to it. And again, this is what happens when you get emotion involved, Charles, when you're trading or when you're investing. You get too emotional. Look, at the end of the day, there is a lot of problems out there. The bond market is signaling that there's trouble. But the other problem you have is you have on the other side of the coin, you've got the Federal Reserve trying to stamp down on things to keep it under control. Instead of letting the free markets trade and discover what the right price is through price discovery, they're trying to manipulate. First, it's the dollar. They try to push the dollar down to help the emerging markets. That didn't work out because the dollar is taking off. Then you got them trying to work on the bond market. And eventually, the markets will overtake the Fed, which is why they're always wrong, and which is why 10 years from now, they'll tell us we had a recession in April of 2020. But they will never know because they can't predict. They're too busy trying to micromanage every single move in the stock market and every single move that goes on versus letting the free markets and letting asset classes price themselves.
Have you bought anything today? Have you bought anything, or what are you doing?
Well, actually, Charles, I'm always a buyer. I'm right now as a trader, I'm very short. But as an investor, I've been buying all along because I buy and I hedge what I own. So I bought Square today down at about $65 or $66. I'm going to look to buy some Apple if it continues to go lower. So I'm not afraid to buy here because I'll go ahead and hedge it anyways. But at the end of the day, certain companies are going to bottom long before the market does. I think the market's got I think we take out October's lows, not this year, first quarter. But in the meantime, stocks will bottom long before the actual lows of the bottom of the markets get in.
In the last 3 weeks, we haven't done much, but we did. Burlington took huge profits. Last week it was Workday, took huge profits, and then the day we got out of Restoration Hardware. Huge profits, but these were buy and hold services, and I'm like, I don't want to hold it if I'm up 25% in this kind of crazy market. Are you buying anything here?
Agreed. Having to go much faster. Did the same thing, bought Target on that big earnings pullback, took
like anything today?
Yesterday, and today what I'm liking is big names that I think when we get the next rebound, because we're going to do this.
Give us one so we can go to break.
Let's go Microsoft.
All right, I'm writing it down. Hey, gentlemen, thank you very much. Todd, DR.